Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, November 6, 2024. It's 2:43 p.m. Eastern Time. I'm starting the video. On this one, I want to do something a little bit different, more of analysis of the global equity markets around the world, including the U.S., and this could be taken as trade ideas because there are some at key levels, meaning well, I'll show you when we get there. Some at support, and those looking to bullish on a country or I'm going to use the country ETFs for those of you here in the U.S. so you can go long or short any company. But more so, what I wanted to point out is it's kind of stood out to me today. We know S&P's up, a big day for the S&P, largely attributed to the banking sector, but not exclusively. But that is a big factor. But here's what I wanted to cover. I want to cover all these individual countries. The vast majority, I'm surprised to see so many solidly red today. In other words, this is certainly unusual what I'm seeing right now. Let me start out here with SPDW. This is the Spiders S&P World ex-US, so without the United States. So this pretty much looking at the major global stock markets around the world, not including the US. And it put in a big divergent high. We've been building divergence since rolled off there, and it's down so far off the highs about 7%. Testing the 200-day moving averages right now. Remember, we had that correction, August 5th lows. A lot of things, if they didn't bounce right off the 200s, they had made a brief undercut and shot. So we're back there. Again, these are key levels that tend to define bull and bear trends. Traders usually buy pullbacks to them during an uptrend. But what I wanted to show you here, besides that's the current technical posture, we had a big divergent high back there and a big drop. Let's turn off all the lines for a second and compare it to the S&P 500. You're going to see something quite unusual. So if I put up SPY here in the blue line, I can roll back as far here. I don't have them starting at the same point, so don't pay attention to the differential. I didn't overlap the lines here. Let me get my volume up price histogram turned down a little so it's not in the way there. Okay. So pay attention to the direction, the turn. So there's they were both heading down. Again, this is as far back as I can scroll, at least on a daily time frame. I can go back farther. You'll see the same thing. You see an almost perfect overlap, each moving in almost perfect synchronicity. And, I've been doing this a long time. And if you have, you probably noticed, the not to sound egocentric here in the U.S. I know Americans tend to think the world revolves around them, but the world stock markets typically do. They follow the U.S. stock markets, again, the developed countries primarily. And you can see an almost mirroring of the charts right there. I'm going to zoom in. You can watch the peaks, the valleys, the ups, the downs, the turns. And, there was a little bit of disconnect here. You can see at this point in time, but overall, again, look for the trends. Was one going up, the other going down, and when did they inflect? The inflection points, meaning the tops and the bottoms, and you'll see there. So hard to argue, especially the major inflection points, the major trends, the major turns, corrections. And then all of a sudden, again, one day doesn't make a trend. It's not one day. It's about a week or so here. This is the S&P 500 hitting new highs today with the SPDW, again, the rest of the world going in the opposite direction, and that's quite unusual. Don't know what to make of it, but can just tell you it's not healthy market behavior. That I can tell you right now, because we don't have many precedents. I'll have to study this chart further, go back on a weekly time frame, go back farther. But what I'll do in the rest of the video, and it'll be, again, I know quite a few over the years, a lot of subscribers that are outside the U.S. Of course, living here in the U.S. and that's the market I trade. But every now and then, and of course by request, I'm always glad to give you my opinion on any chart. If I can chart it, I'll give you my opinion if I have one. But what we're going to do now in this video is just take a look at the rest of them. And again, I'm doing the global ETFs. I have a watch list I always keep up on my screen, and that's what I noticed today, what stood out to me with the S&P making that new and still divergent high. By the way, I forgot to cover it in the last video. Very much, we're still, I'm focused on the NASDAQ 100, but the S&P back in June 26, I also gave you a final market top range which and also on the weekly chart. And so we're a hair above it right now, but this is a weekly chart. We've had 1, 2, 3 hits at the top of the range. I told you before that was the preferred area is the top of the range because it would bring us in line and line my targets up to the key Fibonacci retracement levels and that I've given on these long-term targets. So there's plenty of time left in this week, especially with the Fed tomorrow. So ideally, not perfect, I put my highest weighting in the NASDAQ 100, but ideally want to see this SPY close back on or below the final market top range level. All I can tell you is this high today is a marginal new and still divergent high and also a back test. Remember, we give a sell signal. I'll give you the first short trade on SPY, and then I could remember, at least in a year or more, usually trade the S&P 5 or the NASDAQ 100. But we had a sell signal and clearly on the weekly, and this is simply a back test right now. So whether or not, forget about the market top range, that's what you're looking at here right now. Now, if we go up much more than that, because we're back testing right now the trend line, again, that's this key trend line off the August 5th lows. Anything more than that, and you've regained the trend line, this is a false breakdown, aka bear trap, whatever you want to call it. So I'm watching for that as well. All right, and like I said, so it's simply extended the big divergence that was in place, so nothing's changed from that technical posture there. But let's now look at all the other countries, and let's just look at it. We'll start out on a daily chart. If I need to loop over to a longer-term weekly, I will. I'll go through them relatively quick, and I'm not going to go through all the countries. I have them sorted by size, the size of the countries. So you're going to have your G7 countries first, and then we'll get down to some of the smaller but still maybe relevant countries that I have on here. So this is SPY. Of course, I already covered that. EWC, Canada, our closest neighbor, peaked here with a divergent high. They are up today, but they're about the only one, a rare exception that I have, especially with the developed countries. Lot to do with, and I took a look at the holdings. About half the components of EWC, that's a iShares MSCI Canada Index Fund, about half the shares are down. So what you have up, obviously in line with the U.S. banks, are the banks. In fact, you can see, the biggest holdings. I have my watch list, like I always do, to the right, sorted by market cap. And what are the biggest components of the Canadian, of this ETF? And of the Canadian economy, the big banks. Royal Bank of Canada, number one at 137 billion. TD, Toronto Dominion Bank. You have Shopify in there and some others, but the big banks are the primary reason that Canada is even up at all, and it's barely up. It's almost flat. So that's EWC off a divergent high. Still, you can't knock this one right now. It needs to break that level to trigger a sell signal, 40.49. That not that I had it as a trade idea, but if I did off that divergent high, that would have been my first target. This is my second target, and that's my, I could add some other ones in here. But if the 200s go, we're going all the way down here. So I just wanted to point that out. Again, lagging the U.S. Quite a bit. Now we'll go into the rest of them. Germany. What's going on here? Germany, U.S. is stock market's at all-time high. Germany is not just down, 7% off the highs recently, 7.5%, but down 3% today. So yes, and if you're wondering, okay, Randy, some of the European or Asian markets are closed now. Well, they were open and their futures are open, and these ETFs that you're looking at here do trade real time in U.S. hours. These are U.S. listed ETFs that trade 9:30 to 4. So the smart money institutions, individuals are trading based on the futures markets over there and what's going on, what they think is going on based on the technical posture of those stocks. Many of those stocks, big German companies, Japanese companies, British companies, they trade also in the U.S. on our markets as well. So there is price discovery around the clock on the big markets, just like the U.S. stock market futures trade around the clock. So just wanted to point that out, guys. And I'm not, again, it's something to watch, just like the treasury bonds. And here's the big takeaway is not all, but some of these, especially when I get to the Nordic countries, you'll see a lot right on these primary uptrend lines. So we're in a much different, where the U.S. market right now, the S&P 500's punching out to a new high. You have a lot of the other big, the biggest stock markets in the world, very near key technical levels, coming off the same technical posture, the divergences. And I always say that's not a sell signal, but they are, indications. You can go back as long as you want. I've charted Germany forever and a day. There was a big divergent high, and EWG fell from there about 47%. That was the last divergent high right here, and we had about a 17% correction. I should say correct. That was a divergent high there, and we had a drop of about 10% in line with the U.S. markets. But again, these are clean uptrend lines. I'm not forcing these. You have the 200 days that come in all together. You know me, I love nothing more than a nice, well-defined support level, such as this trend line. I like it all the better when you have intersecting other additional support levels. In this case, the 200-day moving averages, which they tend to buy, in an uptrend on pullbacks too. And once you break the 200s like you did here, you're in a downtrend until you recover the 200s, all right? This was a break of them, nice heavy correction down below. And also, it's not lit up now, but I will light it up for you. I've had forever and a day here. Price support level about $31, and I'm going to turn that level on now. So quite a bit there. And so this would be major sell signals if and when broken. And again, you have to wonder, why are most major and even a lot of the minor stock markets down today? Again, this is kind of a reflexive thing. We'll see if it sticks in the U.S. And look, as I always say, sell signal or uptrend or support. I like to say support is support until unless broken. So EWG, Germany, is in an uptrend. So I'm not going to knock that. That uptrend can continue. And so a minute ago in the beginning of the video, I said you can use these levels to trade with. So if you are longer term bullish on Germany, for example, or any of these I cover, it's TA 101 or trading 101. You buy a pullback to support with a stop somewhat below it. Likewise, if you are bearish and looking to short Germany, you do not short now. You short on a break, you set alert, and you short when the 200s and this, especially this uptrend line, are taken out. And then you can see my targets right here. Looking at the chart, just like GDX I was warning about, those divergences building, and things start to look ripe for a breakdown. I think that's, the odds are pretty good, but nothing would surprise me. We could go up here, and then I could be talking about this 2 months from now or a month from now at a higher and still divergent high. Unless these divergences get taken out and we're not in close proximity to very significant levels. So in other words, another way to spin this right now is Germany and most of these countries are at much bigger risk of breaking down and triggering major sell signals than they are breaking out to new highs right now. Now, they haven't done so, but you have the levels. I'd encourage you to replicate these if you are interested in watching this, because if you start seeing the rest of the world breaking down, I don't care if, how well the banking sector or any individual stocks are doing. That's going to be a bad sign. We're still in a very, global economy where problems elsewhere affect the U.S. It goes back as long as you want in time. You can go back to the Asian contagion in 1998, or when Greece and the pigs, they called them back then, Portugal, Italy, Greece. They had their problems, and it affected the rest of the world. And so here, let me just get to the other banks, or not banks, the other markets. This is Italy right here. Italy, big divergent high there, big correction, big divergent low. You want to get long and strong. Divergent high, correction, divergent low. And off that divergent low, that hit there, it started forming this uptrend line when we hit this divergent low. And this uptrend line continued. Italy's been a little wonky. It had a breakdown there. It snapped back above it, was dancing on the trend line, but then broke down, back tested. So, will the real whipsaw please stand up? This was a whipsaw, but then we recovered, but then that proved to be a whipsaw, and this was a back test. Had a little minor trend line here, and it's broken. Again, Italy's down 3% today. Why is Germany? Germany, Italy, all these major countries down? And again, just a random down day doesn't mean too much. I always say that. A big up day, like today, for example, in the U.S. markets, or a big down day, unless it changes something technically, like breaks above a resistance level or below a support level, it's just noise within a trend. Right now, all I can tell you is Italy is testing EWI, this Italian ETF, is testing the 200-day moving averages. Last time you could have bought them here, and that's what so all longs cover all shorts go long. That was August 5th. Remember, everything hit the 200 days then. We had a brief stint below there, but once they clearly recovered, it's remained in that uptrend. So all I can tell you right now is we are below the uptrend line. We're testing the 200 days. That puts Italy on a sell signal below the trend lines. Again, a little sloppy action there. I'm not putting too much into it. I don't have a position in it. But if it takes out the 200-day moving averages, and again, that's what the charts look indicative to me. That's the most likely scenario. We're going to come down here. I'm going to pull that line up. There's your sold target if you want to trade EWI. Initial target, I should say, about a high probability target. One that I would love to see hit, unless things are falling apart around the rest of the world, you probably get a nice reaction. It's a super well-defined trend line. And it gives this whole thing a breakout here. So look, as long as you remain above that, it's a breakout above that resistance. But if you break that, then things are going to be getting really ugly. There's really something going wrong with Italy. Okay, next up, Japan. Japan peaked right here. Had a crash recently when the U.S. stock market was falling and the yen was crashing against the dollar, and then they snapped back, and BOJ, the Bank of Japan, pulled a 180. They were trying to tighten financial conditions, and the baby threw a fit and screamed, and Daddy gave the baby back what they wanted, more easy money. And either way, it's just kind of, that's not healthy price action, first of all. But you have this whole area of consolidation with a divergent high, and Japan is flat today. So it's not really rallying, it's not really down, but it has taken out, took the 200s out here, but there was massive intervention from the central banks to stop that slide there. And all I can tell you, we took the 200s out again, and you're currently back testing them. Sometimes you break them briefly and you recover. Either way, this is a key level to watch right there. And again, we're coming off this big divergent high, so it looks like nothing goes straight down. You put in a divergent high, you have waves, consolidation, and then you have these periods that often, not always, but a period of consolidation or a trading range. Once broken, then that's where the real selling starts. So I see the same thing right here. Once that level goes again, it went, but there was massive intervention to stem that slide right there, that crash. And but if we go back below there, I think the downtrend will resume. All right, EWQ, France. France peaked here with a divergent high. Another major European country down 2.5% today, despite the U.S. having the S&P 500 having the day it's having. Probably could add, we could use that trend line. Let's use this as the primary trend line. I didn't have this one marked up. Well, there's one trend line there. There's a near-term trend line there. Either way, what we have here is a divergent high. And sometimes you get these divergent highs, you just get little tradable corrections like this, and we've already had one. We put in a divergent low there, but sometimes you put in, especially after a series, and what this really is, guys, is like the U.S. market, a big series of more consecutive, bigger divergent highs, negative divergence that goes back quite a ways. And so therefore, that's what you get. You usually get the shot across the bow, first divergent high, sometimes DH2 or 3. It's usually about the third or fourth one. Again, if they're consecutive divergences that build over time, many months or years, that you get the bigger drop. So that's what that one has. It's not lights out at this point, but it is a country that has peaked back in May and is clearly well off that high right there. Obviously, it's closer to a multi-year high than low, so again, can't write it off too much. I just wanted to point out the levels here and show you that that's quite unusual to see. Pretty heavy. These guys are down pretty good. Here's the UK. This one's right on a key trend line. So this is where I figured I'd do the video after seeing enough of these right there. EWU, the iShares MSCI United Kingdom Index Fund ETF. And right there, big divergent high, nice and clear, negative divergence, I should say. There's actually bigger divergence that spans back there on the PPO, but let's just focus on this divergent high. And again, that's it. Oh, all the better. You've got the 200 days. See, they bought the 200s here. They bought it here. We were in a choppy, sloppy trading range there. But again, in a normal trending market, the 200 days, you buy pullbacks, they act as support. And then once they clearly get taken out, you're in a downtrend, like you were in a downtrend here when they got taken out, and they got recovered here. And this whole thing, you were below them. So that's it, right on the line. Much more downside. It's going to take you to that first support level there, ish. And I would say more of a support zone. Again, if anybody is interested in any of these as individual trade ideas, I can mark up. When you're near new highs, I don't have upside targets. You just buy pullbacks and set your stops and let it run. But I can give you downside targets because I have the price history, the reactions down below in which to do so. And there's a larger, more significant long-term downtrend line that was broken here. Maybe we'll go on to backtest that. All right, next one, EWA, Australia. Right there, you have the big divergent high, Australia down today, and also down quite a bit. It's already fallen about 8% off that divergent high. And, is it the beginning of a much bigger drop like this divergent high right here, which effectively gave you a double top high, or not? So we'll see. Like I said, certainly a bearish technical posture despite a current uptrend. This was a current uptrend, so if you said, what's the trend? Right here, I'd say bullish. What's the technical posture and your outlook? Bearish, right? And that's what happened. All righty, next up, the FXI, China. China's still holding above that breakout right there. Threw it out. PGJ, I think, is or FXI. You could take either one. And it's still holding there, but really nothing. With all that massive stimulus, China's going to probably come and do some more. I don't think there's any limit to what the central banks will do anymore. Unless, like I said, the Fed starts losing control and they see by continuing to cut rates, if they get another rally out of the bonds after tomorrow's 25 basis point rate cut, they're going to start to see that it's having the opposite effect, and they're going to have lost a lot of their power. So there's FXI. Oh, down today, 3%. So again, what's going on with the rest of the world being down? This is another China ETF right there, down 2.16. Again, I'm just clicking my watch list, each component. CWI is a SPDR's MSCI ex-US ETF. Already covered that, I believe, or a similar one. There's Russia. They took Russia offline after the invasion. You can't invest directly in Russia anymore, so RSX doesn't trade anymore. EWY, South Korea Index Fund, just sucking wind. I don't really have much of an opinion there. And just what's going on with South Korea, I don't know. EWH. See, I'm getting down to some more obscure things that don't move the needle as much anymore. But the takeaway is, the rest of the world's down today. There's Hong Kong down to over 2%, Taiwan, and I'll wrap up here when I get to some of these Nordic countries that are coming up. Vietnam right there in a clear downtrend. EWM Malaysia down. I'm just a sea of red. That's the thing. I thought it was odd when I looked at my watch list. It's like the U.S. is just about the only thing up today, and everything isn't flat or up less. They're just actually outright down, and that's, again, it's unusual, guys. Again, take of it what you want. One day doesn't make a trend. Watch that. If that continues to develop and you continue to see the divergence I showed you earlier, then that would be a problem. Here's Sweden right on the line, uptrend line right there, coming off a big divergent high. Last time I had negative divergence on the daily chart was right here, and EWD, which is a Sweden index fund, fell about 18%. The only other time before that in recent years I had divergent high was back here, and Sweden fell 47%. So, take it for what it's worth. That's the way I see it. EWK, Belgium, another one right on the line right there. And that's so these guys are poised on any more downside. Oh, and look, this thing's just been riding up those 200-day moving averages, right on there as well. So breakdown there and price support. You have triple resistance below. You see this on EWK, and something's rotten in the state of, well, this is Belgium, not Denmark, but either way, we'll get to that. EWL, Switzerland, right on the line. So look at how many of these just are right on well-defined primary uptrend lines. That's the uptrend line off the October 2022 lows. Remember, there was a correlation. That's when the U.S. bottomed. Everything bottomed mid-October of 20. Most things, most big developed markets. And so the U.S. right now is doing this, and the rest of the world is doing this. Why is that? What's happening there? Either way, like I'd call it a yellow flag. And again, something to monitor. And again, a trade idea as well. If you are bullish, you like Switzerland, I'm sorry. There it is. You can go long at support. Me, now I'll pass right now because, you start buying off divergent highs, and what happens, support one after another, support levels get taken out. So it's just something I'm going to monitor for right now, and I'll continue to update it. EWN, the Netherlands, right here. Nice, clean uptrend line we're currently testing right now. Again, another one down big today, 2.5% down. What's going on there? Something's going on there. And again, it's, they peaked back here, and you had a sell signal. A little wedge break down there, divergent high, and EWN has already peaked and fallen about 14%. So that's it. U.S. fiddles while the rest of the world burns. I wouldn't call it a burn yet, but either way, just again, something to note, and watch and trade if you want. Austria, right on price support, below the uptrend line there, but on that price support right there. EWP, Spain had a breakdown, backtest rejection, another backtest, tried to regain the trend line back below it, and again, down 5% today, despite the U.S. having a really good day. Maybe I'll just wrap it here with Mexico. It's funny, I don't know. Nobody knows what Trump's plans. Everyone laughed at it. To send back as many people as he's talking about. The logistics of it. It's not possible. We all know that, but we'll see what he does with the illegal immigrants in the country. It's just kind of notable that we have a big reversal, so far a bullish engulfing candle in EWW. It's not up too big, but it had a big reversal. It must not have liked Trump's win at first, and then all of a sudden they decided they do. I guess they're going to get a lot more unskilled laborers coming back home. I don't know. I shouldn't make humor of it. I just want to point out, and there was a beautiful wedge right there. So this is Mexico there. Divergent high, correction. Divergent low, go long. Watch, rinse, repeat stuff. Divergent high, correction. This is a divergent low. I don't know why, but this one's looking better than. And again, it has nothing to do with the other countries. Most of the countries I covered in here were either European or Asian countries. So here's Mexico. Take the chart for what it's worth. Hammered off support today. It hasn't finalized this yet. Potential bullish engulfing candle, but it's also in a downtrend. It's also in a solid bear market. It peaked back here in April, and through today's lows, it's already fallen 31%, and it's in a clear downtrend. So break above the downtrend line. It's not super well defined, but that could trigger a rally. Either way, just wanted to share those charts and share that divergence that I started the video with, which is extremely unusual to see the rest of the world going south lately, in the last few weeks, couple months, and the U.S. going north. Again, I'd have to, and I will, knowing me, I'll sit here and get that same chart I started with earlier and go back and see when the last time we had that. All right, guys, I'm going to wrap up here, get the video out to you. This has been Randy Finney with Right Side of the Chart. Have a great day.